Tyler, I overheard someone the other day saying, will the stock market ever go down? It sure doesn't look like it.
It never will. I know. It absolutely will. We just don't know exactly when. It does seem right now, though, like nothing can stop Wall Street's bulls from pushing this market higher. In today's sessions, gains were modest, but they were enough to send the Dow and the S&P 500 once again to fresh all-time closing highs. The Dow was up 49 points today. Record there, 15,105. NASDAQ adding 16, and the S&P, it was up 6 points. Helped by some encouraging data on housing and on another round of strong corporate earnings. More about those a little later. So what does the recent run-up in the markets and rising prices for stocks mean to individual investors like you? Jane Wells tells us how some investors are weighing whether to get into the market or maybe take a little cash out.
The markets are high and keep going higher, not just here,
but the clear outperformer was Japan.
but everywhere.
Especially today, we saw new 5-year highs being hit in Japan on the Nikkei.
Does the individual investor believe it can last?
I think it'll continue to grow.
That's nonsense. One of these days it's going to crash.
I think you're going to see another dip, and then I might go in then.
Many have already gone in. Last quarter, E-Trade says customers bought $1.2 billion more in stocks than they sold. TD Ameritrade saw a 20% jump in net new assets. And Charles Schwab saw a 9% increase in new brokerage accounts from February to March. Seems everybody's positive.
It does worry you when everybody's positive.
Craig Rumberg is an individual investor who runs a staffing company, Cyberforce, which gives him a unique perspective on employment. So he's investing in things like healthcare and even airlines.
I try to tend to look at things that I can feel and see. So when I just took a flight, it was packed, and all these flights are packed.
But as global markets also rise, Germany's just hit a new record. Managers of international funds are waiting for investors to pile in there too. Sammy Simnagard at Fidelity likes what's happening in Japan, and he also likes companies which cater to consumers in emerging markets.
There are a lot of European luxury companies that get 30, 40, 50% of their revenues from emerging market consumption.
It all sounds great, but Craig Rumberg says a lot of regular folks have a hard time believing it.
At this point, the market's rallied, but most of these people that I talk to that are regular average Joes haven't participated. Either they were scared or they're still recovering from the last crash.
He says the biggest challenge facing the market may not be fundamentals, but trust. For Nightly Business Report, Jane Wells, Los Angeles.